Hi there, this is the story of ZIM. They recently reported the results for the second quarter, and now you have to see whether this dividend of over 46% is sustainable. And another important question, whether ZIM is a great investment at the current price. So the answer, you will find it in this box. During this video, I'll open the box and you'll find the answer here. Now, to understand my answer, you have to look at their business and the most important indicators. First, take into account that the market cap is about 1.7 billion and the price $14 per share. Now, if you look at the revenue over the last 3 years and more recently Q2 2025, you see that the revenue was 12 billion in 2022, then a decline to 5 billion, then 2024 an increase to 8.4 billion, and Q2 2025 revenue 1.6 billion. This was a decline in their revenue. Now then you look at their earnings and you see 2022 4 billion in earnings. Pay close attention to this. 4 billion in earnings, 4.6 billion in earnings. And look at the market cap, current market cap 1.7 billion. So ZIM was able to make more than 4 billion in the past in 2022. And if they can do it again, imagine what will happen to the current market cap. From 1.7 billion, can have a 4x. If they can deliver another or more than 4 billion in earnings. Then 2023, big surprise, a decline, a loss of over 2.7 billion. 2024, the earnings rebounded. They delivered 2 billion in profits. And now for the second quarter, 2025, the earnings only $24 million. So a decline. Now, to predict the future of this business, the dividend, you have to look at the earnings and understand why they are so high in some years and so low in other years. And there is one simple indicator. You can look at more indicators if you want, but there is only one important and simple indicator to track if you want to predict the future of ZIM and get another dividend, maybe 40% or 100%. In the past was even higher. So that important indicator is the average freight rate. And you can see that in 2022, that rate was above 3.2k or 3,000. 2023, 1.2k, so a decline. 2024, 1.8k, so a rebound, that rate. And Q2, a decline to 1.4k. And as you can see, based on these rates, they report their earnings. They are able to make a profit and increase the revenue. When rates are high, they report a high profit and high revenue. When rates are low, case 2023, revenue goes down more than 50% and they report a loss. When these rates goes higher than 1.4k, they're able to report a profit, as you've seen for Q2 2025 or 2024, 1.8k. Now, so all you have to do to see, whether ZIM is a great investment or not, you look at the rates. And you have to predict those rates to predict the future of this business, their earnings, and their dividends. So how can you predict the rates? How can you do that? Well, first, you have to understand why rates went so high in 2022. In 2021, they were even higher. That happened because of pandemic. Then 2024, you had war, shortage supply, and those are the things that push the rates higher. So all you have to do to predict the average freight rate, whether it's going up or down, you have to predict the next pandemic, the next war in the Middle East maybe, or Ukraine, and another shortage. Of course, this shortage happens because of war or pandemic or other catastrophes. This is all you have to do. Predict the next bad thing. And when you have bad things that create, better said, a shortage supply, you'll have a spike in the freight rates back to 3K or even more, and then a spike in their profits over 4 billion, and then a spike in the dividend over 40% or 100%. So it's quite easy to understand this business and predict the future. All you have to do, predict the next bad thing. Now, the next question, maybe you wonder whether this dividend about 46% is sustainable. Here's the thing. You have to understand that they have a policy to deliver between 40% and 50% of their earnings, net income, in dividends. So 40% or 50% of their earnings will go to dividends. Now, for Q2, they reported $24 million. And they announced that the dividend will be about $7 million. This means 40% of the earnings will go to dividends. And what does it mean, 7 million for it? Well, $0.06 per share. And this means a dividend yield for the second quarter about 0.42%. So this is the dividend you will get, not 46. On Yahoo, on Google Finance, you will see 46 dividend, but that's not the real dividend. The current dividend for the second quarter will be around 0.4%. Now, this dividend for Q3 and Q4 can increase, go to 10%, 20%, or lower. They can cut the dividend. And this will depend, their dividend will depend on their earnings, how much earnings they report, and on the freight rates. If rates stay flat about 1.4K, or they go lower to 1.2K, then for sure you won't get any dividend. Maybe for 1.4K you will get a small dividend like this, 0.4%. If they go higher to 1.8K, then your dividend will get higher. For instance, for 2024, 2 billion earnings. That means 1 billion went to dividends. So again, if rates go up, yes, you can have a higher dividend than the current one. If rates go lower, the dividend will be cut for sure. Now, if you look at the past freight rates, the average in a normal scenario, those rates were about 1K. So if those average freight rates go back to the past, to the mean, to the average, 1K, that will be quite bad for ZIM. You won't get any dividends in the next years, and they'll continue to report more losses in the future, because also their net debt is over 3 billion. Don't look at their assets. You might see their assets over 11 billion, but be aware that most of their fleet, about 90% of it, is rented or chartered, and they have to pay rent for those ships. So don't rely on their assets. Be aware of their net debt, over 3 billion, and they have to pay interest on this debt. So if freight rates go to 1K, that will be a disaster for ZIM, and especially shareholders, because they will continue to report losses. And guess what will ZIM do? They have to cover their losses. And guess what will they do? They will start issuing more shares. And that will affect the future value of shareholders. So, in my view, ZIM only if freight rates go to 1K, in my view, ZIM is a bad investment. Now, if you have, as I said, if you can predict the next war, the next pandemic, which can create a shortage supply, then ZIM will be a great investment for you. You buy now and wait for the next bad thing to happen. And then you have a spike in the market cap from this level to X easily, or even more than that. It depends on that pandemic or war. So now, to open the box and show you the answer, in my view, ZIM is not a great investment because you depend on the average pay rates. This volatility moving around on other bad things to happen to create a shortage supply. So for me, ZIM is not a great investment. Now, if you want great investment ideas, high returns, you can simply go to my profile, press join, choose Titan Investor, and there you have access to my portfolio. And there I have really great investment ideas, undervalued with a margin of safety, get a dividend plus buybacks. And the price to find out my investments is quite low. I mean, you pay $25 and you can make more than 10K, more than $10,000 just by investing in one of my companies. That's an amazing value for you. Of course, you also get access to an investing course, other in-depth analysis, and bonus a stock prediction challenge. So it's up to you. If you want to stop losing money, join my membership. And if you have other questions about ZIM, please let me know in the comments.